And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Our guest today, three of the very best in the business. Anna Paglia is the new head of ETFs over at Invesco, who runs the #1 tech ETF in the world. That's the NASDAQ 100 QQQ Trust. She'll be joined shortly with Todd Rosenbluth from CFRA and Jay Jacobs from Global X Funds. Anna, let me start with you, though. It's just you and me for the first few minutes here. The best year for ETF flows in history in 2021. A tremendous close, particularly in November and December. Big inflows right across the board. More money coming from mutual funds converting to ETFs. I anticipate that'll happen in 2021 more. Is there anything, just generally, broad stroke, anything that can interrupt these continuing inflows into the ETF business?
No, Bob, that's the short answer to your question. The long answer is that you named it. We had a record year for the ETF industry in 2020. The industry has amassed more than $500 billion of new assets, and that proves a couple of things. First of all, the industry is not saturated, has not reached the capacity yet, but it continues to grow. The second thing is that investors really accelerate their adoption of ETFs in periods of market crisis. We have seen that in 2000, we have seen that in 2009 and 2010, we have seen it again in 2020. So I don't see anything in the horizon that can stop the growth of the ETF market. If nothing else, education is reaching all-time high for this technology. Adoption is becoming widespread. And, 2020 has also taught us a number of lessons on the resilience of the ETF wrapper, especially when it comes to fixed income ETFs.
Yeah. One thing that really struck me was that big tech ETF you control, of course, the NASDAQ 100 QQQ, nice flows there. But the junior QQQ that you debuted in the middle of the year also has done really well. You have $300 billion in assets under management there. That's essentially the NASDAQ 101 to 200, I guess you would call that. And the appetite seemed really strong for that as well. Your thoughts for tech in 2021?
It is. And Bob, we couldn't be more pleased about the success of our innovation suites. QQQJ, QQQM have really been embraced by the investor population. Invesco is at the forefront of ETF innovation. And for us, the key word is not really technology. It's really about innovation. We have seen that innovative companies were the ones that succeeded in 2020. And if you think about the NASDAQ 100 or the NASDAQ 100 Next Gen, QQQJ, QQQM, is not really about technology. We have had innovators in other sectors like healthcare or communication. So I think that we should expand our viewpoint and our concept of technology to go into innovation. Whoever is able to innovate, whoever is able to invest in technology development and research is really going to succeed in 2021 and beyond. And the QQQJ, QQQM really embrace that. Everything that brings innovative ideas to the market is likely going to find a place in those funds and in investors' portfolios.
Yeah, so tech is certainly having a moment. One thing that disturbs me a little bit is the concentration of in the S&P 500. The top 5 stocks, Anna, as you probably know, are almost 25% of the S&P 500. Overall, I think this is the highest concentration since the 2000.com bubble that we saw. I don't know what your thoughts are on this, but you do control something for people who are concerned about that, and that's the equal weight S&P 500, RSP. Could you just give us your thoughts on this concentration we're seeing? Is this worrisome? Is this like 2000, or is this occasionally happen? Should we not worry about it? How should we look at this concentration?
Well, Bob, I think that every time that there is concentration, you should be looking at that. You should be monitoring that. As you said, we do have a very effective product that is going to help investors hedge concentration risk. That's RSP, the equal weight S&P 500 ETF. The fund has performed well. The fund takes away the risk of concentration. And if I were an investor, that would be something that I would be looking at with a very close eye, because as you know, concentration can be good if the top 5, top 10 constituents of a portfolio perform really well. But as soon as you have a collapse, as soon as you have something unexpected happen in one of the big companies, your portfolio can take a very big hit in terms of returns. RSP is the vehicle of choice for those investors who have tried to take away concentration from the S&P 500. We have seen terrific assets, significant assets going into the fund at the end of last year and the beginning of this year. And to us, this is really reflective of the fact that just like you, other investors are looking at concentration in the S&P 500, trying to stay away from that and trying to diversify into other products that provide the same or similar returns to the S&P 500 index, taking away concentration risk.
The other big theme, other than concentration, which I talk about all the time at CNBC, is thematic investing. And I'm wondering if you think this is going to continue. We see, of course, here where Invesco has a number of big thematic tech ETFs. TAN, the solar ETF, had a tremendous year, not only up price-wise, but a lot of new inflow. Clean energy, PBW, also did well. The water ETF, PIO, did well. Right across the board. I've sort of worn out the carpet talking about why investors like thematic ETFs. Could you briefly explain what is the attraction, and do you think that's going to continue, this style of investing based on themes?
Absolutely, Bob. I believe that thematic products are going to be the big winners of 2021 and beyond. People are expressing more and more interest in those products. Our clients vote with their money. And if you want to know what investors are going to buy, you just have to look at how they behave, their normal behavior in their day-to-day lives. Investors at this point in time, they are very conscious about their social responsibility, environmental responsibility. They don't just want to look at returns. They want to look under the hood, so to speak. They want to know exactly what they are financing by buying an ETF. And their sentiment, their passion, their strong belief really comes out when you look at the growth of ESG ETFs and thematic ETFs. With the thematic ETFs... All right,
I want to break...
Oh, sorry, go ahead, Bob.
Go ahead. I'm sorry. Finish your thought, Anna.
Sure. I just wanted to say that with thematic ETFs, it's easier for investors to bring their passion to life because they look at a theme, solar, water, clean energy, and they can invest in 100% in that.